So first I'd like to introduce Linda Elkins, who is in charge of the Silicon Valley Innovation Center for W.L. Gore Associates, which is a nearly $4 billion revenue, 60-year-old company specializing in industrial materials innovation, based on the American East Coast, founded by some chemists formerly at DuPont. And if that name sounds familiar, yes, these are the folks that created the famous Gore-Tex water-resistant fabric that is used seemingly everywhere now. Gore is very famous for its culture of encouraging experimentation, innovation, always asking why not, but also relentlessly focusing on how to commercialize these ideas in a big way, which is how Gore-Tex became the business it is today. Linda has degrees in mechanical and biomedical engineering from Notre Dame in Michigan, worked for a number of years in Gore's medical products division, and more recently she's been leading teams at their Silicon Valley Innovation Center exploring synthetic biology with an eye towards sustainability, and particularly developing another number of programs and facilities engaging with entrepreneurs and startup ventures, the very thing we're talking about today, and I'll have her describe that in just a moment. We also have with us Dr. Dragos Maciuca from the Ford Motor Company, where he is Executive Technical Director of their Palo Alto Research and Innovation Center, which he's built up to over 300 technical experts looking at not only artificial intelligence and electric power kits like you might imagine, but also sustainable materials and other environmental concerns, which cover a lot of your folks. He came to Ford from Apple Computer, interestingly, where, as I understand it, he made the iPhone camera work, but was also previously at Lockheed, BMW, and Nissan. And you have to confirm, Dragos, I read that almost 30 years ago you were working on autonomous vehicle controls in Europe, which I think shows that the latest thing always has a long tail on it. His PhD and master's is in mechanical engineering from Berkeley, and he has a bachelor's from Rutgers. So if I could turn it back, starting with you, Linda, if you can do a far better job than I in explaining what you do at Gore and your Silicon Valley Innovation Center.
Sure, absolutely. Well, great to meet everyone. Thank you for the intro, John, and the opportunity, Victoria, to speak with you guys today. So yes, Gore is an advanced materials company. So we are 60 years old. We are privately held, which plays a role in how we approach innovation as well. Gore very much takes a long-term view. And by being a privately held company, it really enables us to go after what we think are the best opportunities across the board, which certainly includes working with external partners and working with startups. So from a little bit more about Gore, before I dive into myself and the Innovation Center, we currently have 3 divisions now. As John mentioned, we have our fabrics division, which is what folks know us best for, which is the Gore-Tex. We have a medical products division, so we do cardiovascular implants within our medical products division. And then we have an industrial electronics division. So this is actually where Gore started. We started in the wire and cable business about 60 years ago. But here we would do filtrations. We do a lot of separations as a company. We make elixir guitar strings, for example, by dental floss. So there's a tremendous breadth of products at Gore that are really built initially on the fluoropolymer PTFE, or polytetrafluoroethylene. And we're now expanding into other more sustainable materials as well. So really the time to reach out and call Gore is when you have a unique material challenge that cannot be addressed with a cheaper or commodity type material. That's where Gore really specializes. We're not necessarily a Me Too company, but someone that really goes after what is a niche opportunity, what could benefit from our unique knowledge of materials and how to adapt them to certain situations. So as far as our Innovation Center, about 5 years ago, I took a commitment to create our first Innovation Center. I've actually been at Gore almost 20 years, the first 15, as John mentioned, in our medical products division. Gore is known for being a very innovative company, but it's always been very innovative internally. So about 5 years ago, we created an initiative to how do we leverage external innovation? How do we start bringing in technology, for example, like AI, ML, that is not inherent to Gore, that's not in our expertise. But if we pair that with Gore's expertise, together we can create an incredible product or business opportunity. So our mission here at the Innovation Center is really to create and accelerate new opportunities for Gore, whether product or business opportunities through leveraging external collaboration. So that's what we're looking to do. We have about 11,000 square feet here in Santa Clara, California, so we can share the breadth of Gore, who we are. We have a co-working space, and then we have about a 2,500 square foot prototyping lab. Where in that space, we work together hand in hand with our partners. So startups can be residents of our lab for 3-month terms and really work with us on areas that we find mutually beneficial to go after. The areas that we are specifically looking at, my team, we have a team of 5. So we have a small team here, but really leverage the breadth of Gore, which is about 11,000 associates worldwide. And our team is looking at new opportunities within sustainability, so specifically around biomanufacturing, but also have efforts that reach into, for example, building materials and carbon capture as other opportunities. So it's a little bit about it. Certainly, I'm sure I missed a few things, and happy to cover those throughout the panel session.
Okay, Dragos.
Yeah, thanks, John. And one small correction. I started working on autonomous vehicles about 25 years ago, so I'm old, but not that old.
Okay.
But you're right. It's been a bit of a cycle. Like autonomous vehicles were first talked about in the 50s, and they were always 20 years out. And then Google at the time, before they were Waymo, they said it's going to be 10 years out, and now we think we're 5 years out, but it's kind of on a rolling basis. But anyway, that's a side note. The office here, similarly to Linda, we opened it about 6 years ago. And probably the easiest way to describe it is what we work on is not the traditional part of the automotive industry. So we're not working on engines, not working on transmissions or suspensions. We're looking at all the new areas of the automotive industry. So that means software architecture, cybersecurity, autonomy. So we're looking at a lot of sensors that go into autonomous vehicles, LiDAR, radar, cameras. We're looking a lot, obviously, in machine learning to do the perception around the vehicle. So AI, ML for vision and using LiDAR and cameras and radar. We're looking at, as you mentioned, sustainability, electrification, batteries. So the term that's been used a lot in the automotive industry in the last few years, it's ACEs. So it's autonomous, connected, electrified, and shared. And all those are brand new concepts in the automotive industry. The connectivity part, where cars have been one of the last devices, if you want to think in terms that hasn't been connected to the internet. And we're doing that both for the user, but also for the vehicle itself, to be able to extract data from the vehicle and do over-the-air updates. Autonomy, again, until now, it's all been about that pleasure of driving. And, I hope it still stays there, at least on the track, if not on a daily basis. But now we're looking at more and more levels of autonomy, both for safety and from a business model. Shared, again, it used to be that vehicle that you have in the garage, and it's yours. And now we're looking at more and more business cases where the vehicle is shared, particularly in urban areas. And of course, electrification, which is probably the biggest disruptor in this industry, because until now, the internal combustion engine has been a huge barrier to entry. It's extremely difficult to build an internal combustion engine, build it by the millions, and have it reliable, have it meet emission standards, have it meet mileage standards. All of a sudden, with electric vehicles, all these things are inherent in the design. And so it allows the market to open to a lot more participants. So now we see competition coming in, not only from the traditional competitors that we had, but from the software companies, from companies that haven't made cars before, from different parts of the world that haven't participated in this space before. So it's both an exciting and also scary moment in the automotive industry. So the last thing I would say as an introduction, this is definitely a very disruptive moment in the automotive industry. People ask me what transportation will look like in 2050, and I honestly don't have an answer for that. All I know is that this is the decade of inflection. When in 2050 we're going to look back to this period, we're going to see that this was the moment that there was an inflection period, not only the automotive industry but transportation in general. From what is a car to VTOLs to a whole slew of technologies that are being experimented with, and we don't know what the final answer is yet. And that's what makes it exciting, but it also makes it, you need to take some very intelligent risks going forward.
Okay, well, thank you. So I wanted to start, the subject here is how folks can work with your organizations, how they would engage with corporate innovation centers like yours and others. And I think one of the questions is, at what stage and in what way? Because if you're a very early startup and you need like a quick cash infusion, or you need some beta sales to prove traction, probably need to focus on getting quick customers and seed investors first. And I think it's probably a longer arc of relationship with a corporate center. So I'm wondering if either of you has some thoughts on at what point in a startup's journey is it best to engage, or on what terms should they be thinking about dealing with corporate innovation centers like yours rather than basic angel investors and so forth?
Sure, I can jump in on that. For Gore, and this is, it maybe is across the board, but certainly for Gore specifically, we are not the best source of cash. We are the best source of advanced materials expertise. So, and that is something that you're going to be able to get through Gore that you may or may not get, from the funding side or angel investor. So, I think coming to Gore when you have a specific challenge that Gore is the best company to solve is a great way to accelerate your product and accelerate the work you're doing with them or with us and, with a potential other corporate partner. So, the corporate partner could be a source of cash, but you really should be going to them for specifically what they can offer based on the expertise that they have would be my short answer.
Yeah, from our point of view, I would say, honestly, the sooner the better. So we've had examples where we've taken startups from the garage to the assembly line. And again, it's better to engage with us in the Valley because we speak the language of startups and we know how startups work, and we know where the startups need help and also how to protect them from the mothership. Like sometimes the mothership can be a partner, but sometimes it can also, have the antibodies or something like this. So we've developed over the years the internal knowledge of how to guide, how to be your Sherpa through that big mothership. In terms of funding, in the early stages, where we can help is mostly being references to VCs or connecting startups with VCs, or rather than us being directly the source of funding. We can certainly provide some NRE. We can certainly provide, some sweat and tears alongside the startup, but we wouldn't make a huge difference. Where we can come in is maybe at the later stages, where if after working with a startup through several POCs, growing these POCs, seeing that the technology is strategic, that the team is coachable, which is very important, then we might actually make an investment. But like Linda said, don't look to the corporates. That is not the primary function of corporates. Is not funding. It's providing the guidance through scale up and taking something from a garage to the assembly line. We could become a source of funding, but that's not the primary role that we have. But we can certainly help with the introduction to VCs, and we can certainly help in our case with pairing up with tier 1 suppliers or tier 2 suppliers so that you can enter into that supply chain that we're much more used to.
Yeah, I was going to ask about that later, but since you mentioned that, and I've heard you mention this elsewhere, that startups will come, and I've seen this, I live up in Seattle, and I've seen this regard Boeing. They say, oh, if we could just get Boeing to buy this, or if we just get Ford to buy it, and that very often Boeing and Ford Motor are not the customer. It's a tier 1 or even tier 2, and they wondered if you could expand upon that a little bit for our audience.
Yeah, so the traditional automotive supply chain is basically this pyramid where we're the OEMs, we're at the top, and we buy from tier 1s, they buy from tier 2s, they buy from tier 3s. So it's a pretty well-established supply chain. Now, there are two things to say there. One is that pyramid, which, if you can visualize it, it's a very solid structure, is starting to fall apart a bit. It's starting to become more of an amoeba. It's becoming a lot more amorphous, where we starting to feel more comfortable buying directly from tier 1 suppliers, or we're having discussions directly with tier 3 suppliers, or just recent example with the chip shortage, we're starting to talk directly to the fabs with TSMC, which was absolutely unheard of even a year ago. On the other hand, if a 10% startup has some really interesting technology, it's still very hard for us to accept working, and making sure that we can rely on a 10% startup when we need to make, 5 million vehicles a year, and we want to make absolutely sure that whatever product they have is actually going to make it in production. So in that case, we come in with our relationships and we can connect the startup with the right level of tier. It could be a tier 1 or it could be tier 2 or 3. And it becomes that triangle becomes a win-win-win, where we get the exact technology that we want, and we probably get it ahead of others, even if there is no explicit exclusivity. Just the fact that we worked with a startup before, we have all the knowledge built in, so we can start on day one. So we have a temporal advantage over our competitors. The startup gets their technology picked up, and the tier doesn't take the risk, because a lot of times the tiers need to take a risk when they develop a technology, when they come with the technology to us. Are we going to buy it or not? And if we tell them we want a certain technology, that risk is gone. And another advantage that we get is that if a tier has a certain technology, they shop it around to all the OEMs. So we don't have anything that's different. Whereas if we tell them what to work on, we know we're going to have something different, at least for a certain period of time.
So it seems to me, to summarize a little bit, that the model we're talking about is where you have, from the startup's perspective, you may have some initial end customers, and you are looking at financing, but as a third leg, in addition to your basic customers and funding, you may look at the corporates almost like development collaboration partners, rather than either sources of funding or immediate customers, but they can help you maybe develop your product either initially or like to a Rev 2.
Yeah, absolutely.
Oh, go ahead.
No, absolutely. And again, I think it's, we, both Linda and I run these offices that speak that language of startups a lot better. And like when you said, another thing that triggered when you said when a startup wants to work with Ford or Boeing, is like, well, those are enormous entities that, which part of Ford are you going to work with? And you need to be guided exactly to that nice slot where you fit in, because yeah, you can talk to Ford and you can get about 20 no's before you find the right person who says yes. And, we have that corporate knowledge to be able to guide you a lot. We'll get 5 no's before we get a yes, instead of 20 no's before you get a yes.
Okay, and Linda, I wanted to ask you, you also have, I think, some facilities there that you can bring startups in to do some physical work. Could you describe a little more both what that is and the working model, or the engagement model with that?
Sure. I'm going to actually start with your second question and circle back.
Oh, sure, please.
When we work with startups, every startup and every relationship is different. So we don't have a template that we go X, A, B, C, D, E, and then you have a partnership or funding. But we'll have an initial conversation, trying to understand, what the startup has that's of interest, where it's applicable within Gore, sign a confidential disclosure, non-disclosure agreement, have another conversation or two. From there, we would go on to what Gore would call a material transfer agreement. So this normally would involve sharing our materials, receiving others, but physical samples that could be very relevant. And from there, we could then move on and potentially do a joint development agreement. So we're really looking, as Dragos mentioned, to be developing with these companies and bringing in their technology or leveraging our technology into their application. So it could easily go both directions. That process could take anywhere from months to a year, pending on if we do some evaluation early on, that takes a longer period of time. So really no set structure. What our physical space in the Innovation Center enables us to do is it really enables us to work hand in hand with these startups to work through some of these steps. It also allows us to assess a startup by providing them 3 months of free space to work in the Innovation Center if we see potential for a relationship together. So in our lab, we have, wet chemistry equipment, we have characterization equipment, really looking to understand, we have a small shop, but probably nothing like Dragos' shop, but, really looking to say, how, can the technology that the startup brings in, can we integrate our materials into that, for a win-win for both companies? We have the, ability for folks to reside in the center and do that and work together. So the lab's been a huge benefit to us. We've had a company, Space Foundry, that did or does surface characterization, come in and spend some time with us. We have a partnership with a company, Checker Spot, as well, that has occasionally or has the opportunity to use that lab as well. So really trying to benefit from that physical space that we created. And sorry, John, I'll add one more thing, but we have a team of 5. I think I mentioned that. So we have the prototyping, the materials expertise in-house, but are really leveraging the breadth of Gore and the materials expertise across Gore through our center.
Okay, so a question related to that for both of you is about global reach. One of the, I think, unique things about XTC, as you've seen if you've looked at our portfolio, is we have, and I can see on the call, we have people from every continent involved. And in fact, vastly more outside of North America than in North America. And there's both positives and problems with that. For example, most of them probably wouldn't actually come into Linda's office there or shop. But I'm wondering what your view is, what your models are for working with startups from other parts of the world, how viable that is, or how are there other ways they can deal with either Gore or Ford?
Yeah, so for us, we, the center of gravity for the time being, I would say, is still Silicon Valley. It's just the nature of it. But we do have a global reach. So we have an office in Israel. We've worked with we have an office in Germany. We have one in Shanghai, in Melbourne. So we do have a pretty global reach when it comes to research. All these research places have been, know how to scout for startups. Ultimately, they still end up going through us, just because we're a better guide than Sherpa, but it doesn't, we're not restricting that interaction. So the bottom line is that we do have a global reach. We know how to reach startups in different parts of the world. Each part of the world has its own flavor. I think, what I've seen over the years is that in the beginning, different parts of the world were trying to cut and paste Silicon Valley. That's not the right way to do it. The right way to do it is to get a basic concept of what the Valley is trying to do and then leverage the local advantages, which sometimes there are many over Silicon Valley, to be honest, and take advantage of that local flavor and push that, leverage that into how you form your startup. In the end, though, I think probably the best model I've seen so far is that the Israeli model, where they keep the technologists in Tel Aviv and then they bring the CEO and CFO to the Valley, because ultimately there is, the VCs are here, and that's what it makes a big difference in the end.
Sure. I think from our perspective, so just to give a little background, Gore is headquartered in Newark, Delaware. We have about 15 plants in the Delaware, Maryland, Pennsylvania area. Our medical products is headquartered in Phoenix or Flagstaff, Arizona. And then we do have worldwide locations. So we have locations in the UK and Germany where we do production, a variety of processes. And then we certainly, as well as APAC, and then certainly sales offices worldwide. When we look at innovation and we look at startups that could be very relevant to our businesses or our new innovation, I mean, we're looking for the opportunity worldwide, right? We would, it's just certainly easier, as John said, to bring in a startup that's local because we're not going to provide housing, which could be a big issue here in Silicon Valley. But wherever the startup is, we'd love to work with them. We'd love to talk to them because we realize the fact that the innovation is global. We could connect them with our teams in the EU or connect them with our teams in the APAC if that makes the most sense. So certainly a global reach and still trying to be kind of the front door to enable those connection points. As Dragos said a few minutes ago, we can help get folks to the right people. Without that kind of front entry point, it can be very, very challenging to get exactly where you need to go in the company.
Okay, another question I had, and then after this we'll see, and if anybody has questions, please put them in chat. Victoria and Ash are watching that, or do the hand raise. We were just, the previous session that ran over a bit was talking about messaging and getting your 20-second pitch down and really understanding what your audience is looking for. And I think that's even more urgent with corporate innovation centers, because venture capitalists will invest in lots of different things that have, a good ROI and seem interesting. But any corporation, Gore or Ford or Boeing or others, have very, very specific things, and there are a large number of outstanding investments that they will not look at because they don't fit into their particular area. And of course, people should do their homework, but I'm wondering if you have any particular thoughts or experiences on both how for startups to do this and what the sort of best preparation for startups if they want to approach a corporate innovation centers like yours.
Sure, I could share a few thoughts. I think when approaching a corporate innovation center like Gore is, understanding who Gore is. The information I shared early on that we are unique, looking to solve unique advanced material challenges. We're not looking to solve, we're not looking at commodities or if there's another way that is cheaper and easier to solve it, that's a great way to do it. And we could certainly recommend that, but knowing what the company's initiatives are to the extent you can and how they approach challenges and problems, which is a lot of information that you are able to find publicly before you initiate that conversation, is very helpful. Another thing I'd say is really leverage your connections, right? So we are, certainly well connected in the Valley. So if you have a way to connect with us through a friend, through a VC, you get a much warmer reaction based on the number of emails we come in, the number of things on our plate. That's just an easier way to get in the door, get that warm introduction, and kind of get things kicked off and moving forward. So those are just a few thoughts.
And I'll just jump in on that point, just for our audience. All of our finalists, with a few exceptions, came in through regional competitions or other engagements that were led by local regional VCs or other incubator type organizations who are themselves inevitably linked to people in North America and in the Valley. So if you're interested in this, and I'm thinking, SG Innovate and Kajora Ventures in Indonesia and Atlantica and Echo in Africa, those folks that you've worked with can be very, I think, good connections to the U.S. connections that can get into Gore, Ford, and others. But Dragos, I didn't want to cut you off. Did you have any thoughts on this?
Yeah, and I think, unfortunately, my answer is going to be a bit fuzzier just because what is automotive is changing. So again, you don't need to have automotive in your business plan. We may still be interested in what you're doing. So yes, we're interested in LiDAR, radar cameras, right? But when it comes to LiDAR, do your homework, obviously, what's out there, because there are already some over 100 LiDAR companies. So at this point in time, I'm only interested in a solid state LiDAR that you can eventually bring the cost down to, $100. And when I was saying that 5 years ago, I was laughing. I'm like, yeah, give me a $100 LiDAR. Now I am seeing that vector, that path, that I am convinced that 5-6 years from now, we are going to be able to get $100 LiDAR units. So do your homework, and if you don't think you have a technology that can get that to that, you probably need to think about something else. But we also need AI chips. And 4 years ago, there was only NVIDIA. Now I'm tracking some 80 startups that are trying to take on NVIDIA by making AI chips. Again, we're very interested in that space, but understand what elements we need, how we need the low power, how we need to do perception and CNNs for imaging. There may be some technology out there that I don't even know that we need. So, a lot of times it's this push-pull where part of it is the corporation, the mothership asking us to look for certain technologies to solve certain problems. Sometimes we find some new technology that, they never thought of that would belong in the automotive industry, and we can try to push that in. So it is a bit of that discussion. And in terms of how you do the pitch, I mean, honestly, some of the most interesting pitches I've had was writing on the board, not even a PowerPoint presentation. It was like the potential founder, the company wasn't even founded. It wasn't even incorporated. We had a potential founder with the potential VC writing some stuff on our whiteboard and going like, is this something you guys would be interested in or not? And, sometimes we are, sometimes it's like, yeah, no, that's way too strategic for us and we need to do it in-house. So, definitely that warm introduction is useful, but it's, having a perfect 20-second pitch is not, sometimes it's, to be honest, it's not. Just make sure you know what you want to do. I would say that's, because a lot of times what does drive me nuts is when some startup comes in with some idea that I've seen already a million times, or they have no idea what their business model is, or they ask us how much we would pay. I'm like, that's ridiculous. Do your homework and know what you want to do. That's to me the most important thing.
I want to ask you another question, and correct me if I'm wrong, but you were mentioning LiDAR and AI chips, but as I recall, you also are looking at like sustainable fabrics and environmental issues. So even broader than just the sort of IT hardware related stuff that one might think of. Can you describe that a little bit?
Yeah, absolutely. So sustainability is becoming obviously a big deal. Materials for, interior surfaces, especially in the light of COVID, if there are materials that are virus proof, bacterial proof. They can be, surfaces that the humans see, and therefore they need to have very high quality, or they can be something that goes underneath the dash, where if as long as it has the right properties in terms of longevity and impact, we definitely are looking at biomaterials that are highly, recyclable. And then all the materials that go into batteries, from cathodes and anodes and new types of battery chemistry. So it is the whole spectrum that covers sustainability.
Okay. So we're rounding towards the top of the hour. Any questions from the audience or anyone would like to raise their hand? And most of you, I think, are muted, but just unmute yourself and speak up, please.
Hello.
Yes, go ahead.
Yeah, I'm Santi from Patjan in Indonesia. I think my question is for Linda. If you are in partnership with other startup, what kind of agreement you will enter to? I know you said it's a bit different from one startup to another, but is it more into profit sharing, equity, royalty, or things like that? Which most common models you apply? Thank you.
Sure. So there's two main things that our team will really look at. So one is how we handle the intellectual property and how that's structured. So, understanding who owns the background IP or that each company comes in with, and the ownership split between any IP that is jointly created as we move forward. So that's certainly something we want to establish early on with the startup and do it in a way that, both groups feel comfortable with and good about. If we can't reach that, then we likely won't end up with an agreement. From a financial perspective, we have done partnerships where there has been no financial exchange. We've done it where there's been a research grant, for example, or we've done equity as well. It really depends on the state of the business within Gore. So where we are at, what business unit is sponsoring it, how much cash they have, if they're able to do that, what the startup is bringing to the table. We could just do in-kind engineering where we're providing expertise. So it really is on an individual basis, but we do generally consider all those options between no money, research grants, or equity. We would normally at that stage when we are looking at what we can develop together, hold off on talking about licensing or other terms and have an opportunity to continue to discuss that later.
And Philip, I see your hand is raised.
Thank you. So quick question for you both. You obviously represent some big names in the respective areas. And for small or young startups, having an association with your companies is a big deal. So I'd love to hear how you guys go about handling public sharing of the relationships that you've established with these startups.
Yeah, in our case, we typically like to stay away from PR announcements just because we don't want to favor one startup over another. The thing that has worked the best is giving feedback to VCs. So let's say in your presentation to the VCs, we're perfectly fine if you say, I'm doing a proof of concept with Ford. And like you said, that does carry some weight. A lot of times they'll come back to us, the VCs will come back to us and ask us for feedback. It's like, are these guys really working with Ford? And what is, because let's be totally honest, we've had some unpleasant surprises where we had that initial discussion with the startup with half an hour presentation just to see what they're about. And all of a sudden they go to their VCs like, oh, we're working with Ford. And when the VCs come back to us, we're like, no, they made a half-hour presentation, and obviously that doesn't look good. So you have to be honest about what that relationship is like. But so far, we've had no issues letting startups put our name. If we actually do a proof of concept, we're perfectly fine letting startups let their VCs know that that's the case. We're much more reluctant to put out a press release saying we work with some startup or another because it's, again, it disadvantages others because we work with hundreds of them, right? So if we put an announcement for all of them, it becomes untenable.
So I'll just give you a different perspective. So we work with, we out of the Innovation Center, we may drive one partnership a quarter. We don't do a tremendous flow. So we do press releases. I think maybe another important point is we'll usually discuss in the agreement how we can use each other's names. So that's an important note, and we'll say, yes, absolutely, you can use your name, or under these conditions, you need written approval. However it works out, I think that's something to make sure you're aware of when you're negotiating the agreement. How are you able to use it? And that's something that's well within your purview to be asking early on in the relationship. Obviously not the first day because it won't come across correctly, but as you get towards signing an agreement with someone.
Thanks. It's very helpful to hear these two different perspectives.
And Iwan, I see you're on or up.
Hi.
Yeah, go ahead.
Hi, my question is for Linda. Do you have an example where if you work with a startup, obviously there's lots of innovations here, and how do you, for example, share the knowledge and the patterns coming to, when it comes to new materials, the utility of the materials?
Sure. So we, when we work with a startup, we are, sorry, I'll back up. Some of Gore's confidential information is protected in patents, some in trade secrets. So we're very conscious of what we are sharing with startups and what they need to know to be able to partner with us and work together. So it may be that we are sharing, what an end result is, but not how we got to that end result, for example. When we created our prototyping lab here in the Innovation Center, we do have a separate room that is associates only, where if we need to do certain processes that are highly confidential, we can do it in that space. So we just use the appropriate legal terms. We also make sure we have a good understanding and feel for who the startup is. As you start to work with these startups over months and do proof of concepts, you really develop a relationship and a gut feel on who the startup is and their intentions and our intentions. And obviously we want to capture that in legal agreements, but you feel good about who your partners are and that, you're both looking for a win-win mutually and you can benefit each other. So I think that's also an important nature. But there is information that we will not share with startups that's confidential and protected. But we share what is necessary that we can to make the relationship work.
Yeah, including is that including, for example, there's a new, for example, I'm looking for a new kind of material, a new kind of, how should I say, a new kind of material behavior. That, for example, that's my invention. How, is there sort of an agreement that, we can get, for example, there's a new material behavior that I need in a certain way, and would, for example, would Gore invest in that if it's interested, of course, obviously, to see the market size of it, if it will work or not.
Yeah, that's certainly something we would discuss with a startup and see if there was an opportunity to work together.
Okay, thank you.
All right. Well, we're close to the top, so I think we'll wrap it up. These both Linda and Dragos are part of our ecosystem, and we can reach out to them. And I believe they will be also available at later in the month at the networking sessions. And actually, the next program tomorrow morning that you'll be coming back to is going to have another large corporation, NXP. So we've had chemistry materials, automotive, and tomorrow we'll have semiconductors, which also cover a wide range of topics, NXP's products. So I think it's very interesting, and I hope you'll follow up with us about this notion that in addition to sort of baseline customers and seed investors, that there's a sort of third leg that you can weave between those two, which is the potential for development collaborations with some of these major corporations in general, and certainly the corporations that are part of XTC. So I think that will be it for today. Victoria, I know you're off, but do you want to add any final thing about tomorrow?
No, I just want to say thank you so much, Linda and Dragos, for sharing your wisdom and insights that help our entrepreneurs sort of navigate, right, the waters of getting to working with big corporates. So I appreciate your time and your engagement and your support of the Extreme Tech Challenge ecosystem. Thank you.
Our
Great
you.
to see you both.
Thank you.
So
Thank
we will see you all tomorrow at 8 a.m. Pacific time.
Yes, once again, thank you, everyone.
Once again, thank you.
Bye.
Bye.
Bye-bye.
Bye.
Thank you.
Thank you. Bye-bye.